Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. IMF begins second review. Electricity tariffs reduced. Pick up in construction activity after 2 years. In our main story this week, on Thursday, a team from the International Monetary Fund commenced a second review of Sri Lanka's Extended Fund Facility program. The delegation is assessing the country's progress in meeting program commitments as well as Sri Lanka's economic health. Shahan Semasinghe, State Minister of Finance, expressed confidence that the review would be smoother than the first as key policies have already been implemented. On a related note, the minister added that Sri Lanka is hopeful of a positive response very soon on debt reform proposals sent to private debt holders. According to the IMF, Sri Lanka should reach an principal agreement with the private creditors ahead of the second review of the program. Meanwhile, Sri Lanka is seeking a 5-month hold on its ongoing lawsuit with Hamilton Resereve Bank in order to negotiate with private creditors. In July 2022, the St. Kitts and Nevis-based bank sued Sri Lanka, demanding full repayment of its over $250 million investment of Sri Lanka dollar bonds. Hamilton Bank opposed the extension request, saying that they were kept in the dark about ongoing negotiations. As per President Ranil Wickremesinghe, Sri Lanka intends to avoid debt repayments until December 2027 and from then on to extend repayment up to 2042. On Monday, the Public Utilities Commission of Sri Lanka significantly cut electricity tariffs. Households, businesses and religious organizations will see savings ranging between 18 to 33%. This follows the CEB in January proposing a low 3.34% reduction in rates, citing higher costs to which the PUCSL vehemently objected to. Further, it was revealed that the CEB has recorded a profit of 61.2 billion rupees in 2023 as significant rainfall reduced generation costs. Merchandise exports in January fell below $1 billion, down 0.8% from a year earlier. Economic slowdown in Sri Lanka's main global markets and regional conflicts dragged trade lower. In the month, apparel exports fell 10% to $380 million, while tea, rubber and coconuts saw a notable increase. Exports to the United States, Sri Lanka's single largest export destination, fell 13% from a year earlier to $220 million. Sri Lanka Purchasing Managers Index for construction in January grew for the first time in 2 years. Widely seen as a barometer of a country's economic health, the index rose to 52.9, breaking the neutral threshold. The survey noted that respondents stated of a new construction work gradually becoming available and of the restart of several suspended projects. However, the employment sub-index contracted. Sri Lanka's Colombo centric inflation decelerated to 5.9% in February from a year earlier. Food prices rose 3.5%, while non-food prices rose 7%, affected by higher VAT imposed in January. According to the central bank, inflation is to rise between 6 to 7% in the early part of the year and then stabilize to around the targeted level of 5% over the medium term. In our weekly tourism update, over 218,000 tourists arrived in the country during the month of February, highest in the post-COVID era. Daily arrivals reached over 7,500 and are now at pre-COVID levels. Russia was the primary source market, followed by India and the United Kingdom. Sri Lanka is expecting to achieve $1 billion in tourism earnings by the end of March. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities marginally increased for the second consecutive week. Bids amounting to 231 billion rupees were received, of which 160 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 307 to 310 rupees. In other market news, Expo Lanka Holdings plans to delist from the Colombo Stock Exchange, offering 185 rupees per share to minority shareholders. The company cited plans to expand its international operations, thus requiring capital to be raised from outside Sri Lanka in foreign currency. And with that, we wrap up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.